It's Thursday, January 16th. Quick one-up video for you wonderful ladies and gentlemen. Markets have been chopping around. We were able to get a pretty decent rebound in the prior couple of sessions, but today was a bit of a consolidation day. A little bit of a move up past yesterday's range and then sort of back into it, which isn't always a good sign. If anything, that usually leads to sideways to lower action. Very simple. Bulls will need to clear today's high of day. I think that we're seeing some of the big names sort of unravel, the ones that had been up a lot into the end of the year. You saw Nvidia, you saw Lilly, we're seeing Apple now. A lot of pullbacks, and of course the news always falls along the line of least resistance. I'm not necessarily so sure if the news about the iPhone not doing well in China is a fact. It was given by a research firm and picked up by Barron's. But generally, I think the traders and the market are looking for excuses for pullbacks and things that were up big into the end of the year. We're starting to see yields come back down a little bit, and we will need to see three things. We will need to see yields come down, we'll need to see the dollar come down, and likely need to see oil come down, although the oil stocks have been getting some rotation, which we had discussed as being likely because it usually does in January, and it often does run a little further and farther than most people think. As far as the TLT goes, as long as it's above the 10 MA at 86.37, I think it's okay, but it needs to clear the 20 MA at 87.04, and then there's probably some resistance between 89.55 and 90 bucks, which is the breakdown level that got cleared on the downside on 12.18. I'm using the 11.6 reference low. And then the 50 MA is up there. If we were to go just to the downtrend here, we could get up into the 91s. As far as the dollar goes, it's pulling back, and it's technically still one time framing, but it's not breaking trend here. We're roughly on the 10 MA, and we haven't broken the 20 MA, so I'd say the risk is still to the upside. If we get up over and stay up over 109.533, I think it's on like Donkey Kong for the 110. If we're able to get below the 20 MA at 108.647, we would have channel low right there. So basically the bulls in stocks and bears in dollar need to break 108. If we could get below 108, I'd feel a little more confident, but not so much here. Oil got a pretty big run. We got into my resistance range of 79.11 to 80.16. We actually overshot, and now we're back down below it, but we are still consolidating over the downtrend. I think as long as pullbacks to the 200 MA can hold at 75.32 and flattening, it's okay. Back below the 200 MA, I think, is a short. Generally, when we see oil go above the 200 MA and then trade back through it, it's a short. Like Nvidia, for example, when we see it trade through the 100 MA on the downside and then back up above it, it's a long, and traders do what works until it doesn't. Eventually, these trades won't work, but we can make money on them in the meantime. As far as the ES and the NQ go, we got the 2 times range of the inverted head and shoulders, so that wasn't such a big surprise. I think that the bulls were able to largely defend the rally today, not so much in the Qs though. Obviously, because of Apple and some of the other big cap tech names seeing liquidation breaks. For me, I need to see it back up over 59.94, but I'm just going to be a tough grader here and say we need to get over the 6,000 level and hold. I've been on this sort of $100 table kick. If we can hold 6,000, we'll probably see 5,900, and if we can hold 6,000, we'll probably see 60.50 and then 6,100. Qs need to hold on this pullback here, 21,088.5, which is basically the neckline from the inverted head and shoulders breakout. I have a little bit of ranges for those because it wasn't a real clear neckline. In the ES, I'm using 59.01 quarter to 59.18.5, and in the Qs, I'm using 21,088.5 to 21,143.75. If we are able to clear on the upside, I think the 2.618, like I said, is 60.50, and the 2.618 in the Qs is 21,726.75. With regard to SPY, we're caught here between the 20 MA at 590.65 and the 50 MA at 594.68. We're not quite above the downtrend line here, but we're not markedly below it. We're still seeing lower highs and lower lows, which is not a good sign. The down auction may not be over yet, but I think the bulls will probably find some resistance between the 600 and 604 if we were to get that high. If we come back down and we lose the 84.03 to 86.12 level, we'll probably get a move still lower, likely down to the green channel low at 571.02, and maybe we'll get the articulation down to the 200 MA, which would likely line up with the 2 times range of the head and shoulders, which now would be a triple tap head and shoulders down at 558.99, and the 200 MA currently is 557.12 and rising. Usually when markets pull back in a controlled fashion, it's either in a bull tape where we're going to make new highs, where we break up over the downtrend line with a gap and go, and it's the one no one expects, and we chase it up to the highs, or there's some type of a larger move down with the capitulation after days and weeks, or even sometimes months of a controlled decline. Qs are obviously very key here. It stalled at the 20 MA, and we're right on the 10 MA, so 513.14 needs to hold, and we need to clear and hold 517.42. On the upside, we'd probably see 526, and on the downside, we could even retest the 501.35 breakout area and maybe an overshoot to the 100 MA, wherever it is at the time, currently 498.18. What was interesting to me on the pullback is the 11.5 gap filled in SPY, but it never filled in the Qs, which told me that the Qs had a little bit more of a bid to them, and now that seems to be drying up a bit. With regard to Apple, we had this big move down on 113 to the channel low, and it bounced. We had a weak bounce to the 50 MA at 238.78, and now we have articulation lower. For a look below and fail scenario, the bulls need to get up over 229.72. If they don't, we had traded above the channel high, and there could be some symmetry on the downside. I think the pennant could fill up to the 219.71 to 220.20-ish area, and wherever the 200 MA is at the time at 216.71. I think that Apple is discounting an earnings miss, and if we're down enough into that, we could actually see a rebound if the earnings number isn't as bad as expected. Obviously, there's fears that the iPhone is trailing its competitors in China because of the AI not being in it, the Apple Intelligence, which is sort of okay. It has a lot of glitches in it, and I think it has a lot of work to do, but generally the iPhone has been going in the right direction, and of course everyone loves the iPhone. I'd feel better on the upside back over the 100 MA though at 233.14. With regard to NVIDIA, that is still above the 100 MA, but sort of just barely. 132.52, as long as we can get below it and back over it, it's fine. I'd feel better though over the 139.88 to 140.76 area. If we could get over there and stay, I'd say the decline is likely arrested. Lilly did get a pretty nice bounce today after that smackdown on earnings. We really are just trading in a pretty big range here, although it does look a little bit like a complex top to me. If you're long, you could use 747.55 as a stop here. If we do continue to rally, my guess is the 794.47 to 800-ish area probably is some resistance, and if we were to get back to the 100 MA, wherever that is, 847.51 and declining, it could be a right or right out short. That was the key MA that we gapped and went below. So far, though, the 200 MA has been the resistance on the bounce. Those are getting very close. 200 MA, by the way, is 839.41, and the 100 MA is 847.51 and falling. Tesla has been pretty bullish, although today it had a bit of a pullback. We're kind of playing footsie with the 20 MA here at 420.18, Elon Musk's favorite number. Bulls here need to hold the 10 MA at 402.65. We could just say 400. And I think they need to get over 430.79, which is the 50% fib of the range, as defined by the 1218 high and the 120 low. Bitcoin, of course, is our ultimate risk-on, risk-off arbiter. It is now breaking trend in the after hours here. I'm good to go with Bitcoin on the upside as long as it holds 100K. The underside of the old yellow channel, if it did it tomorrow, is 107,257. Gold has been pretty strong, even with a strong dollar, which is impressive. Maybe it's gold's time to shine. It is kind of over the triple tap, head and shoulders, right shoulder, but it did have a bit of a topping tail. My guess is the 11.5 gap fill there at 253.40 would likely be some resistance. I'd start getting more bearish if we couldn't hold 247.76 on pullbacks. Generally speaking, I think that we were up a lot into the end of last year. We did see some selling in the very end of the last year for lock-in, and I think on this calendar flip, we're seeing still more lock-in when things haven't been chased up. We're seeing that rotation into oil and oil stocks. It's coming out of big tech to some degree. I don't necessarily think that we won't pull back and then recharge again in the tech names because these are the big momentum names that have led the market. My thesis for this year is that we're probably going to have a lot of volatility in a range, and things will look like they're breaking down or they'll look like they're breaking out, only to kind of vacillate back and forth in range. I have a thesis here with that. I don't know that it's going to be fact. And of course, I will reserve the right to adjust if and when said levels don't hold. Like and follow for more.